Okay, cool. We're ready to go. So the just short. Okay, let's take a look what's going on. I'm gonna start from the hourly chart because primarily that's where I'm seeing the market maker sell model right now. Let's see. Just delete that. So yesterday I said I was thinking about second stage redistribution here, but this fair value gap getting inverted is not a good sign for that. It might be choppy. Also, there's SMT divergence at the lows right now, so this could very well be a pullback completion because the fair value gap is inverted, the big one from yesterday. Let's see. Yes, take out this high. 94.50, 90.8. Okay, there's equal highs here on ES. That could be also considered as SMT divergence at the highs. Let's see, so we have an order block here. The four up close candles is the order block, which was rejected just right now at open. There is mine's OP. There's on sell side right here. I will take this one as my sell side target because if it goes here, it's gonna knock out this one. This is essentially engineered liquidity because the rejection was at CE of the wick here. I suppose it seems like it's the CE. There you go. I'm also going to annotate the fair value gap from yesterday as well. This could be used as a potential entry. Let's do it red for shorts. Alright, take a look at the 15. Where's the SMT divergence at the highs though, King's Plan? I don't see it. Oh, here. Okay, I see what you're saying. So here, there's an SMT divergence. So ideally, I really want to see the hourly sell model getting completed, just because. So the bounce from EQ couldn't send the price to buy side here to all-time highs. Because of that, it also sold off afterwards. So because of that, I'm expecting sell side. Because usually the pullbacks from EQ of the range delivers one side at least, so it doesn't come back down here again. Let's see. The 1 minute. Oh my god, my alarms. Hold on. Let me turn them off. I have like 20 alarms. So yeah, again, I don't like the fact that after the SMT divergence at the lows from yesterday, inverting the fair value gap from yesterday's close. I don't like that fact because in the event of this rallying, the whole chop from Monday to Tuesday, so the whole price action becomes the original consolidation. So ES is also not aligned with Nasdaq at the moment. See what's going on 15. There's the break around the 15 minute. The failed order block got rejected just right now on Nasdaq. We also need to consider weekly profile. Yesterday made high of the week. It wouldn't make sense to reverse right here without making a low today. Now, I mean, weekly profile, you really get a hold of that after Wednesday's close, though. Yo, good morning, Tim. How you doing, brother? Good to see you here, by the way. I just woke up. So that being said, Nick, it could really be anything. Like it could be midweek rally, midweek reversal, or midweek consolidation. You know, all those weekly profiles until Wednesday close. It could be Wednesday high of the week, Wednesday low of the week. Go back down to 1 minute. I want to look at this dealing range here. So essentially, that's my south side. Okay. So I would say even though this is rallying right now to the south side on Nasdaq, the fact that ES is not making any move is making everything first of all low probability and um, choppy, even though it doesn't look like it. You guys remember this happening like last week's? It really like made the low of the day like that on Nasdaq. ES did not follow, and the whole day was a rally higher. So here, what I'm trying to say essentially is, if Nasdaq wants to go to the sell side, ES really has to pick up the pace here. It might do something like sweep the highs, because essentially that's equal highs and then rally, and Nasdaq will definitely wait for that move. Let's see, 9:42 right now. Let me check the calendar. I haven't looked at the calendar today. Okay, there's nothing. I'm able to see the stream. I wonder why can't you see the stream? Okay, so let me just look at the chart on the hourly. So if it loses the inversion fair value gap again, this will um this will have potential to target FOMC lows today, which is technically what I want to see, because I'm really rooting for this sound model on the hourly, which is why I'm keeping an eye on the hourly chart and its PD arrays. I want to utilize them on the 1 minute. or combine it with the 1 minute rather. Yep, I'm looking at the same range, Tim. I'm on the same page with you, brother. For me personally, this kind of move at 9:30 is always uncatchable. Like I don't like to trade. I don't trust it. I don't trade it. But if you guys can feel confident, shorting something like this at 9:30, there's nothing wrong with that. It's because personally I don't like it because I get hurt. I got hurt before, so I have like PTSD. Man, I really had the longest day of my life yesterday. It was brutal. So we see ES. Okay. I'm gonna annotate the hourly fair value gap on ES, and essentially what I want to see is I want to see ES staying below the CE of this fair value gap from Tuesday 8 a.m. So maybe like sweep the high and then close below the CE before 10 a.m. or at 10 a.m. and sell off. That is what I want to see. Trading view is laggy today. How'd you guys do yesterday? I saw a couple people pass evals, make good money and stuff like that. It was a clean sell-off afternoon. Like the price yesterday actually set up beautifully for New York session, just because this is where New York opened. So it opened after structural shift within a fair value gap, and as long as it respects that fair value gap, it's supposed to sell off, which is what happened. It was quite choppy, I would say, because the Mohawks, the wicks are way too wide. But at the end of the day, it comes down to lower time frame confirmation, anyways. So in those wicks, you wouldn't get confirmations for short sell. Let's try to make a game plan here. So now there's SMT divergence on the 15 as well. The main thing I'm concerned about going short or long here is like one asset or the other is about to follow one or the other, and I don't know which one is going to follow which, or which one is going to follow who. Because, like I said, this could be very well going for the highs, and in that case, this SMT diverges on the 1 hour. So from the low here to, I would say, here becomes the original consolidation on the hourly chart, which is not confirmed actually. There's no structural shift. There's no OB failed OBs or stuff like that. Yes, microcharts, but H1 swing high already. Oh, okay. Good information. Thanks for letting me know that. Shorted US 100 yesterday as well. Then woke up to it stopped even. Yeah, yeah. In this market, your entry's got to be very precise if you're just day trading. So, I mean, what has to happen? What you need to do is essentially, if, the moment Nasdaq trades into your POI, gotta switch to one minute chart and wait for confirmation. Otherwise, you'll get wicked out. Same deal here. If you were to be late short in this fair value gap this time, if you were to short it without a lower time frame confirmation, you would have gotten stopped out as well. I caught the end of day short, but closed when my break was over. Added $101 on the static account. Currently 2,000 plus drawdown and only need 1,600 to pass. Let's go, bro. Good morning, Nazmi, or good evening rather. The SMT was made with engineered liquidity in the hourly chart. Yes, I know. So Nasdaq is staying below the fair value gap on the 1 minute. Let's see. Like I really want to see ES catching up with Nasdaq here at 10 o'clock at the new hourly open. There's also a rejection block on the 4 hourly. Right there. Okay. See what ES is doing. So now it created this thick price action. Once it breaks below it, it shouldn't violate these highs again. Now it hasn't broken traded below yet, but if it does so, it should stay. and this makes premium fair value gap. Now that price action is knocked out, so this is a big PA. The highs of that price action should not be traded anymore for the sell side delivery. Let's see what the risk is. If I can get a short today, what I'm gonna do is I'm gonna take partial at the low from Monday, and I'm gonna leave runners all the way down towards the consolidation and try to grab that. Because I believe today or tomorrow, that could be targeted. Could probably today. It's not a big range actually. It looks like a big range, but it's actually just 200 points. And we already know Nasdaq trades like 200 to 500 points a day. So I feel like today is gonna be a trending day. I know, right, bro? Like we really missed trending days nowadays. It's been like large range days for almost a whole month. I'm willing to go short during 10 o'clock manipulation. I would probably disregard the lower fair value gap. I would be looking at the higher one here. At 10 o'clock open. Let's see what happens here. Oh, we have a BPR on NASDAQ 15 minute. And with that, you believe that take price action on the 1 minute should not be violated? Yes, it shouldn't. It's mainly because this leg is supposed to be the second stage on the hourly chart, and because of that, the order flow has to stay clean, one-sided, at least until the short-term sell side gets tagged out. So I want to see the old hourly, how it aligns. It might not even get up here as well. I can see this like using this old hourly fair value gap as a resistance and staying below it, making all these PD areas a breakaway gap. Okay, let me annotate the 10 o'clock open here. Yep, that's gonna be the case. No, I'm not looking for scalp longs. I never counter trend. Counter trend trade. So it created a formed an order block using the CE of the old hourly fair value gap. Sell side is taken now. Not gonna lie, I kind of feel like a bit of FOMO, but you know, because I heard that shit with myself before, I know how painful it is. I'm trying to suppress that feeling. Let's see. Let's see if ES can trade into the hourly short-term sell side. So I'm looking at a potential pullback areas right now on ES, so I can understand where Nasdaq can reach into. I'm definitely not using the lower fair value gap because the risk is way too much. And the order block is at CE of the old hourly fair value gap. It should not get violated. Because essentially that changes the order flow in the 1 minute, not 1 minute. So apparently there was short-term SMT divergence at these highs. I did not notice in the at the time. So ES made a higher high, Nasdaq made a lower high here. I'm willing to see the reaction from the upper fair value gap. Okay, I'm gonna pull more charts here on my other monitor. I mean, I'm pretty late to the move right now, which is why I need to be extra cautious. Because if I short right now, my stop wouldn't be safe stop loss for my risk management purposes. Because in that case, I'm not respecting the manipulation fair value gap here. So I would rather Either miss out the move or wait for the upper fair value gap. So far, it's respecting at the CE. ES is about to touch the equilibrium. I think the likelihood of getting up into the 5 minute fair value gap is also very likely for me right now. And also, the next 15-minute candle could potentially be an up close candle, and it makes an order block on the 15-minute. Who's already in short right now? Either close their positions or lead left runners and running the wave. Close down. Where'd you close? Did you close during this take price action? I think the best way to learn catching the big moves is just like moving stop at break even and let it go. You know, that's how you learn it. And you force yourself to watch the price action and try to stay calm, try to not get emotional and stuff. And that over time teaches you and give the experience and the confidence that you need. Top step X. I'm waiting for one 15-minute up close candle right now at this point. Because if you think about it, so the order block here, distribution to the lower end, three down close candles, now the fourth one, and or maybe the fifth one could create the order block, so it will secure or create some kind of an order flow, because essentially the order flows are created by the order blocks, right? Is it the top step X accounts, King's Plan? got you. What time is it? 10 hours. Okay, now the 15-minute candle opened. I want to see this closing as an up close candle. The fuck? So guys, I mentioned doing a giveaway during my live stream this week. So I want to do it right now. I'm giving away 50K starter plan on my fun features. I just posted the giveaway in VIP giveaway chat. This is exclusive to the audience of today. You can simply go navigate to the VIP giveaway channel and just simply click the enter giveaway. Good luck. It ends in 2 hours, so by the lunch hour, it should be announced today. Hopefully, I'll be doing more giveaways. It's just like I'm just establishing my partnership with my final features. Like it hasn't been a month yet, but over time, I think I'll be able to grab more accounts with them for giveaways. I was actually trying to push them to give me expert accounts, but I guess I need to get um build a relationship with Sage before that. Okay, so what happened here is the order flow has changed. Before the dump, the last up close candle was the order block. Now it failed and became a breakup block. What we can do here is it's anticipating the up close candle on the 15-minute, but the question is how deep it's gonna go. That's the part I don't know. I'm still expecting it staying below this tick price action. Now this order block on the 1 minute can get violated. That doesn't mean much to me anymore. But ideally, it stays within this IOFD area. But I'll take a look at the. This is a fake. This is a manipulation, though. I can confidently say it's the manipulation because there's no SMT divergence at the lows. It started plumping almost like at the 15-minute open. It's trying to create the order block. That's what it means. Nothing more because it needs to make an order flow here. You know what I'm saying? Like the order flow will be made by the order blocks essentially. So now the IFPD fair value gap and breaker, it's stuck within. Let's see what happens. I'll clean the chart a little bit. I'm gonna make myself aware of this dealing range right now. So ideally, because the hourly fair value gap, which is the gray box here, got inverted, I would rather see it staying below that fair value gap. Um, but we'll see. Go back to. So on ES, we have a potential rejection block on the 15-minute, same as Nasdaq. If it closes as an up close, but I want to see that ES with like being drawn into the sell side rather quickly. That and that way both assets could move faster. Let's see. So it seems like we might have trapped shorts here. If it confirms, I'm gonna grab a couple contracts here. If it emerged that fair value gap. Alderman tried to cash this move, got stopped 2 times. I mean, here's the thing. If you see 9:30 moving like this, it's better to wait for 10 a.m., honestly. Otherwise, like you mentioned, you'll get stopped in the direction of your drawn liquidity, which sucks. It happens, dude. Don't go hard on yourself. Cause I mean, you don't want to talk to yourself like that. You know what I'm saying? Like, okay, let's see what's going on here. 9 to 16. I'm not feeling that. Instead of like calling yourself names, bro, what I would say is try to analyze or review your trades and see it as a way to, for as an opportunity to grow. Like you got to learn from those mistakes. You know what I'm saying? Otherwise, you'll keep doing the same thing, and over time, it's gonna kill your confidence. Maybe your stop loss was too tight, or you entered out of FOMO, or whatever the case is. Like try to find the core problem and tackle it. A beautiful point by Tim right there. Like I learned instead of criticizing myself to ask myself questions once my emotions are settled down. Reflection is greater than criticism. Absolutely. Like criticism, self-criticism is never constructive. You got to criticize your trades, not yourself. The risk here, it's 17 points. I kind of want to fill this. Guys, also, if you don't know who Tim is, Tim's a good friend of mine. He's an amazing crypto trader. I would recommend checking his Twitter page, which is Trader Tim. He's a crypto whisperer. If you like to trade crypto, that's your guy right there. The secret is, um, it was for me. It was stop trading crypto. No, I'm joking. I'm gonna wait 2 more minutes. I'm gonna let the 15-minute candle close here. I'm seeing this as a trap on the 1 minute. So this is another potentially sell model. Just waiting for the 15-minute close. I'm gonna see that as closing as an up close candle. Standard deviations. Short-term SMT divergence. So you see what's going on there. So what happens is short-term SMT divergence is being created at the fair value gap for actually BPR for Nasdaq, and on ES, it's actually rejecting from the rejection block. This is probably gonna violate the trap. Here's what I'm thinking right now. With this candle, the 50-minute will be closed. So I'm seeing this as a pullback on the 1 minute, right? So pull back into discount of the short-term range. 15-minute closes as an up close candle, creates a fair value gap right there. So above this high, it's going to be the 15-minute candle, 15-minute fair value gap. I want to see the next candle trading into there, rejecting immediately and selling off, which makes the current 15-minute candle the overbought. Jesus, this drawing looks like Dave. I don't like this. I don't like that. Okay, 15-minute open now. Here's the 15-minute fair value gap above this high. Let's see trading there one time, one tap, reject immediately. and closes it down, close candle, make another block is my game plan right now. I've never watched Dave. I've never watched anyone besides ICT, to be honest with you, because ICT's videos were just like, in terms of time, I didn't have time to watch anyone else honestly after ICT because it's long, and I didn't even watch it with like sped up or whatever. I didn't skip at any second. I don't know. I was obsessed, dude. Like my story is quite different. Like I already mentioned a couple times. I want to talk about this later. Maybe like I'll make it quote unquote shotgun Saturday or something. For me, like there was no option, dude. Like I never had a 9 to 5 job. You know what I'm saying? So I was really like, I had to make it. And because of that, like I was working 24/7 to understand how this works, trying to digest every single word he said on his videos. And I think because of my motive, I worked a lot to make it happen, like day and night. Because again, I didn't have any option. Like literally, I didn't have any option. I'm not like saying just to say it, but I didn't have a job. I didn't have. So I lost my work permit during COVID because everything was shut down. After COVID, I had to wait for my work permit for another year. So I couldn't get a job, obviously, like legally. And I'm actually, like, at the time it was painful, yes, but I'm actually grateful as well because it allowed me to push myself even more. You know what I'm saying? So it clicked so fast. I wouldn't say it clicked so fast, but for me, when I was learning, I wasn't just like I wasn't just taking his ICT's words. I was trying to make my own interpretations. You know what I'm saying? Like I was always trying to think out of the box while I was watching or back testing and trying to find more in price so that it looks easier to me. Because essentially, what matters is so the way ICT sees more the market, it's going to be different than you, me, or everyone, right? Because it's the easiest for him. And so if you take that information and apply it for yourself, you gotta create a new language for yourself because it has to be easy for you specifically. And with this group, that's technically what I'm trying to achieve as well. I want to push everyone in here to think out of box so that they can find their own language. So by any means, you don't have to stick to these strategies that I'm showing, but what you can do is you can take that information, create your own interpretation, so that it looks easier for you, for your eyes, for your mind. You know what I'm saying? So, okay, 50-minute fair value gap is about to. I want to see immediate reaction there, which is also going to be potentially an SMT divergence. So, not ES has a rejection block there in premium, which is also the CE of the old fair value gap. Should reject that level. Gonna okay. Yo, good morning, Fabio. I'm doing good. How you doing? nice. You want to show around? Yeah, team design. This concept of manipulation, yeah, I love it. Yeah, I mean, I mentioned this during the first stage or presentation of the market maker model. You got to anticipate the order block, right? It's never the delivery will never like down close candles, down close candles into the target, right? So it allows you to be patient, anticipate pullbacks, order blocks, and whatsoever. So general rule of thumb, what I've noticed is after two or three distribution candles like this, so in this case it's three, you can expect an order block. So I want to see a push here, immediate reaction, and sell off. Same deal. So the short-term sell side. It's a great area to TP. All right, so it's trading there right now. Let's see what happens. I want to see immediate reaction. Hopefully we'll get that. Fabio, yeah, are you trading today? Are you trading today? I'm willing to. I'm willing to grab a short. Waiting for ES rejection block. Yep. Maybe ES one more push to CE of the fair value gap is what I'm waiting for. But obviously, if it breaks down before that, that's also fine. I'm also aware of the hourly SMT divergence here at these levels, but I don't believe it's gonna be there. Let's see. Okay, so he has traded into the rejection block. Let's see what happens here. I want to see ES staying below the high here, this high. I want to see it sweeping there because that changes things. It violated the rejection block. I don't like that. Let me see. Okay, here's what I'm gonna do. I'm gonna fill two contracts once it trades into the 1 minute fair value gap one more time. My stop loss will be at 10 a.m. open. There you go. Now I'm filling the short. Stop loss here. First partial at the sell side, short jump sell side. I'm treating this as an order block, but I'm making myself aware of a potential mohawk. Because ideally, the hourly candle is still open, and I don't want to see it turning green here for a continuation, which is why I'm putting that 10 a.m. open. We might potentially get a SMT divergence there. If ES takes out the south side, I'll probably break even my position as my stop loss. I'm gonna sit on alert there because I usually miss these kind of moves. Alright, let's wait and see what happens. Well, first things first, I want to see the order flow changing here with the inversion fair value gap. That's the first thing. This fair value gap here. Because as long as it stays above it, the odds are against me. Okay, that's good. Now it needs to body close outside. Why I close in rejection range? It did violate a little bit, but I guess that's permissible because of I looked at the next candle, and it opened right at the CE, which means there is a gap there technically. So new 15-minute candle opened Let's see what happens here. That is a strong candle on the 1 minute. So the idea is, I'm anticipating two up close candles, and the third one could happen as well, but I'm not anticipating that because I'm expecting a trending day here. So I'm thinking like market should keep it to a minimum in terms of manipulations. Yes, looking stronger than Nasdaq, vice versa. Nasdaq looking much stronger than ES right now. So let's see. I'm not gonna move my stop loss until ES takes out the sell side. Let me fix the charts a little bit. I don't like how it looks right now. So the idea is also the hourly candle. I'm speculating about around the hourly candle at the moment. The idea behind my trade is the hourly candle should not turn green, so it shouldn't trade above its open price, and it should close below the hourly sell side, which is this level here. That is the idea behind my execution, and I want to see a continuation after that. Still respecting this fair value gap CE. It's not a good sign. I want to see it ripping through right away instead of like going back and forth there. Because the more time it spends above it, especially above CE, the mid level, it means the odds are against my short. Bullish SMT divergence. I'm thinking ES will probably take out the sell side here, and that might be the real SMT divergence. In that case, I'll break even my stop loss if it ES if ES takes out the sell side here first. It's still respecting. Yeah, I want to see this candle closing outside now. If it closes outside, I'm moving my stop break even here because it should not violate the 1 minute fair value gap again. Okay, now ES took out the sell side. My stop at break even. Let's see what happens here. Ideally, I want to take partial at the short-term sell side and leave the other one to FMC lows. And if I break even this trade, that is fine. It's a risk-free trade from now on. Let's see the hourly. Okay, here's what I'm going to do. Because we have two down close candles on the hourly chart, if I don't get stopped out before, if this candle does not go below the short-term sell side here before the hourly close, I'm gonna manually take one contract out because I'm thinking we might see an order block on the hourly at 11 o'clock. There's an SMT divergence. Let's see. I want to see the hourly close below this level. So it breaks the structure down to the down. I'm aware of the bullish SMT divergence, which is why I break even my trade, my stop loss. But I'm willing to hold it. So 3 microns. I did another $100 draw. Let me see. Great job, Brown. Like, 100. The thing I like about micro trades is like it accumulates pretty good. Like $100, $100. It accumulates pretty good. At the moment, what's more important to me is how hourly closes. That's what I'm interested in. I want to see close something like this below the sell side. My man doing high frequency trading on the static account. I'm kidding. I know you don't, bro. So in about 7 minutes, if it closes without taking the short-term sell side, which is likely, by the way, I'm willing to take one contract off from my position manually. Disconnecting my trade away to keep my profit safe. That is very smart, brother. I can delete this. Let me clean the chart a little bit. This is the CE rejection on the 1 minute. So it traded down into discount fair value gap on the 1 minute. Bullish SMT divergence. But again, I know I don't have the safest stop loss, but because I believe it's going to be a trending day, I'm keeping the position here. Normally, though, like traditionally, once it traded down here below the fair value gap with a bullish SMT divergence, you should take one contract off. Especially like if you think about it, the wick on the hourly is way too big, and it might reject there, but you know. Let's see the 5 minute. 5 minute is range bound. So Tim, CE is essentially the fair value gap's mid level. So the midline is what's called CE. Consequent encroachment is what it stands for. I have 4 minutes till hourly close. So here's what I'm gonna do. Let me just annotate this. I want to see hourly close below here. Even though it's respecting the 1 minute fair value gap here, my stop loss is still not safe. Yeah, it's what? I don't know. I didn't take them. Dude, didn't you smoke after I slept? Didn't you smoke after I slept? I don't know. I didn't touch them. The lighter is here, though. The lighter is here. So, if I had stopped out in this position, what that tells me is the hourly will print or form a swing low first before making any moves. So the following candle will probably close above the short-term sell side, so that it could form that as a swing high, right? And then in the afternoon, it's probably going to run it. Because as of now, that's not the sell side on the hourly. It's the sell side on the 1 minute, 5 minute, and 15 minute. And there's a rejection block there. Here. I literally told you that the lighter is here. You didn't listen.
You asking me if I was the
I
lighter.
didn't smoke.
Why did you take the lighter?
Huh?
Why did you take
Because I used it for something else. Alright, this is the hourly close. I'm about to run my stop loss. That's an ugly mohawk. Here's what I'm gonna do. So in 25 minutes, it's gonna close the candle, and we're probably gonna see an hourly manipulation. Because of that, I'm gonna um, close one contract, pay myself, and it's not closing below the area I want to see it's closing. So I'm taking out one contract there, gonna leave the other one because now the odds are against me. So two things can happen here. It confirms the low as a swing low. This candle closing out higher than that. Rejection at the sell side. So the odds are against me at the moment. What could happen is, like I mentioned, it confirms that as a swing low on the hourly chart, and then run into a fair value gap or a PD array, and then sell off. So ideally you gotta wait for 2 hours essentially, or like 1 hour. So 11 o'clock, 12 o'clock, 1 p.m. is how long you should wait before reshorting this. Wait, what's your question again? Oh man, work is a big distraction. My God, so where we meant to ask, please, why didn't you use the 15-minute three bearish candle as a dealing range for equilibrium before shorting that 1 minute you use? So first of all, I did not use any dealing range. I didn't look at any dealing ranges here. And secondly, the question you asked on the 15-minute, the why I did not use this, because the price is already weak. So we already had decent run. So what I did was I anticipated an order block on the 15-minute, and because there is a fair value gap and it rejected with an IFED, I was like, okay, this is going to be the order block. It's not going to retrace deeper than this. Now it could though, because there is an SMT divergence at the lows, the bearish PD arrays and the discount are being respected. So now it could, or it can. And also, if you look at on the 1 minute, what happens is it formed a sell model, right? That means the pullback is completed, right? You got to be looking at the lower time frame at intermediate or higher time frame levels. So in this case, if you look at that 15-minute fair value gap, then switch to 1 minute, what you'll see is a bearish SMT, ES rejected at the fair value gap CE, Nasdaq rejected at the 1 minute fair value gap high, which is algorithmic delivery, and it's sold off. That's right. So it's creating the sell model. Thus, you don't have to look at the premium discount of a 15-minute candle, 15-minute time frame. And I'm gonna trail my stop to, let's see. So there's an order block there. You know what? I'm gonna keep it actually. Yeah, I mean, I know my stop loss right now is not a safe stop loss, but because I already paid it myself, because it's a risk-free trade, I'm okay keeping it open. Like I can see this running into my stop loss super easily by looking at the hourly chart. But then on the 15-minute, I can also see this running the short-term sell side as well, or at least like below these fair value gaps. So ES is sweeping the sell side one more time. This could be the bounce. Is it frozen? Really? Discord is undefeated, guys. Because I didn't touch any settings or whatever. Yep, so this is probably going to be the bounce. Either way, I'm fine with it. Alright, you know what? Let me just restart this stream. That should solve the problem. How about now? Okay, perfect. Yeah, I can definitely see this turning back higher with within this hour without taking the sell side. What's the now I'm concerned because there's a head of shoulders here, which is never a good sign here. Head and shoulders undefeated. TJ, I already explained that in the class couple weeks ago. So in the first market maker class, second market maker class, if you go through that through stage one, the first stage of the market maker model, I said the first stage of the market maker model, and the idea behind that is so the first retracement it always creates an order block on the relatively higher time frame. So the retracement you see here on the 1 minute, okay, if that's the first stage, let's say it's the first stage, right? That's going to create an order block. So the intention of that retracement is going to be forming an order block on the higher time frame because order blocks are what's creating the order flow, right? Because when it's bearish, the bullish order blocks are not going to get violated and vice versa. So you need to anticipate those order blocks before entering on the 1 minute or on the lower time frame. Otherwise, you'll get stopped out. And the way I anticipate it is essentially waiting for the distribution, 1, 2, 3 candles, and sometimes 2 candles. But the fourth one or the third one becomes the order block. So you expect that closing as an up close candle. That way you can time your entry as well. Once that closes as an up close candle, then you can look for an entry, right? Because you know that this candle is not going to distribute lower if you were to be short in that. It's the same thing on the 15 minute and the hourly. It works the same way. So on the 5 minute here, 9:45 candle, which is right here. If you can say or if you can anticipate that this 5 minute candle duration is not going to distribute, that way you're allowing yourself to not execute in these fair value gap B tests because you know that it's not going to distribute within that 5 minutes. That price became a bit choppy here. I can see myself getting stopped out here at break even by looking at the hourly chart. So far, there's the order block here, which is being respected, kind of like in a sloppy way. There's a short-term rejection block there. as well getting rejected. So I'm gonna probably, I mean, I'm thinking it's probably not going to take out the short-term sell side within this hour. Um, because of that, I want to trail my stop, but I'm not seeing any significant area to do so. I might be using the hourly chart open, which is here. Let's clean this. Because gun to my head, I'm thinking it's gonna form the swing low on the hourly first before running that sell side. You're welcome. So again, you've got to be anticipating relatively higher time frame order blocks. Meaning, if you see the model on, let's say, the 5 minute, during the first stage retracement, you need to anticipate a 15-minute order block. So you got to wait that 15-minute candle to close before entering into any position, really. While we're waiting for this, I'm gonna grab a coffee real quick, guys. Now 15-minute candle turning bullish. It's range bound. Wicks to the both sides. Rejection block here. Like I said, I can literally see myself getting stopped out in this position, which is fine. That means I'll be waiting for a re-entry at 1 o'clock or after 1 o'clock, I would say, because I would be waiting for that swing formation on the hourly and retracement and sell off. Why did I? The idea is like today I want to see at least ES catching up with Nasdaq here on the hourly, which will send Nasdaq even lower, I believe. Alright, be right back, guys. I'm gonna make coffee real quick while we're waiting for this. I'm back. Fabio, welcome back as well. Okay, so got stuff out there, which is okay. So here's what I'm gonna do. I'm gonna wrap it up here for the morning session. The idea is, I just want to make that clear here before I close the session. So if you're short from the morning here at 9:30 or like before 10 o'clock in this candle somewhere here, if your stop loss is at break even, you can keep that. That should be safe. But if you're not in a position right now, and if you're seeking a short opportunity, here's the game plan you should have. You should wait for the hourly swing low formation. So you should wait for the 11 o'clock candle close first, then a retracement, which is probably going to be an order block, and then and only then you should be seeking a short entry, not before, not after. And that order block will probably form a lower time frame market maker sell model. If we can spot that, that is a trade. Is that clear for everybody, or do you guys have any questions about that? So I want to make that clear, loud and clear. Fabio, is that clear? Amazing. You're welcome, Gooby. Because idea is this is not going to run the sell side, because at the moment this low is not sell side. It has to be swing low. That is the idea. So as always, thanks for coming by for the morning session, Tim. It's always my pleasure to see you here. I hope I'll see you more often. And also, do not forget to enter the giveaway. 15, in 54 minutes, the winner will be announced. So make sure you guys enter the giveaway. It is. I'm gonna put it here so you guys can navigate it even better. It's easier for you. And I'll probably be back at 1:15 or something. I want to stream the afternoon session. I think this is gonna keep going lower. So here's two things: swing low confirmation. The following candle will either retrace into the fair value gap, closes an up close candle, and go lower, or it could also come back to old hourly CE, which is also the higher fair value, upper fair value gap, a wick there, and sell off. So two scenarios there. We'll see what happens. Either way, though, it's going to create a lower time frame sell model. So yeah, I'll see you in the afternoon session, guys. I'll make the announcement when I go live. Thanks for coming by. Take care. Have a great rest of the day.